Marcus Webb pushed his cleaning cart through the marble lobby of Sterling Capital Management at p.m., just like he had every weeknight for the past 7 years. The Wall Street investment firm's glass towers gleamed under Manhattan's lights. An American flag hung in the lobby, reminding everyone that this was where the American dream was supposed to happen. But for Marcus, a 43-year-old janitor from Detroit, that dream seemed reserved for others. Floor 42, Executive Suites. This is where the real money was made. While the traders and analysts were long gone for the night, their Bloomberg terminals still glowed with aftermarket data, casting blue light across mahogany desks. Marcus would wipe down surfaces, empty trash bins overflowing with crumpled analyst reports, and sometimes, just sometimes, he'd pause to look at the screens. It started innocently. A curious glance here, a mental note there. Marcus had always been sharp with numbers. Back in Detroit, before the auto plant closed and he moved to New York for work, he'd managed his family's finances so well that his wife used to say he could make $20 last a month. But this Wall Street stuff? This was a different language entirely. The patterns fascinated him, though. While these Ivy League graduates shouted about complex derivatives, algorithmic trading systems, and leverage positions, Marcus noticed something simpler in the data, something they seemed to overlook in their rush to be clever. He started reading the financial newspapers left on desks. The Wall Street Journal, Barron's, then the thick analyst reports tossed in recycling bins. His curiosity grew into something more. The public library near Port Authority had free access to financial databases, and Marcus discovered he could learn everything these traders knew, maybe more if he just put in the time. Every morning after his midnight shift ended at a.m., before heading home to Queens on the Pac 7 train, Marcus would stop at the library. Coffee in hand, exhausted but energized, he'd study. He took meticulous notes in composition notebooks. He tracked stocks. He learned to read financial statements, understand P/E ratios, analyze cash flow, spot undervalued companies. The Wall Street traders had their fancy Bloomberg terminals and six-figure educations. Marcus had discipline, time, and a different perspective. With his tax refund for $7, Marcus opened a brokerage account through his phone. It wasn't much. Most Americans his age had more in their checking accounts. But it was his start. He bought shares of 3 companies he'd researched thoroughly. Boring companies that the Wall Street hotshots ignored. A regional bank, a manufacturing firm, a small pharmaceutical company with a promising drug in trials. Nothing flashy, nothing that would make headlines. Just solid American businesses trading below their value. 6 months later, that $487 had grown to $820. He'd added $100 from each paycheck, but more importantly, his stock picks were working. Not luck, strategy. 1 year in, his portfolio hit $4,200. The traders upstairs were bragging about their 8% returns. Marcus was up 23%. He kept quiet, kept cleaning, kept learning, kept investing. 2 years in, something changed. It was a.m. on a Thursday. Marcus was emptying trash in the break room when he overheard 2 junior analysts talking near the coffee machine, too absorbed in their conversation to notice the janitor. "I'm telling you, the consumer discretionary sector is about to explode," one said, gesturing with his overpriced latte. "My model shows your model showed Tesla at $12 was overvalued," the other interrupted. "How'd that work out?" They laughed. Marcus kept working, but he was listening. These guys with their Columbia MBAs were guessing. Sophisticated guessing with fancy terminology, but guessing nonetheless. Marcus's portfolio had just crossed $12,000. He'd made strategic moves. These guys missed. When everyone was panicking about inflation, he'd bought dividend aristocrats companies that had increased dividends for 25+ consecutive years. Boring? Yes. Profitable? Absolutely. When tech stocks crashed and the analysts were crying in the bathrooms, Marcus had calmly bought the dip on companies with actual earnings, not just hype. While they were leveraging complex option strategies and losing their shirts, he was building wealth slowly, methodically, the way most successful American investors actually do it, with patience. Year 3, his portfolio hit $28,000. He'd gotten a small raise at work, and every extra dollar went into his brokerage account. His wife Sarah thought he was crazy spending so much time on this hobby, but she'd stopped complaining when he paid off their credit card debt and started talking about actually taking a vacation. Then came the moment that changed everything. It was a Wednesday night. Marcus was cleaning the conference room after a long strategy meeting. The whiteboard was still covered with projections and ticker symbols. As he erased it, Brad Hutchinson walked in, one of the senior portfolio managers, the guy who drove the Porsche and wore Patek Philippe watches. "Oh, sorry man, didn't know anyone was still here," Brad said, barely looking at Marcus as he grabbed a folder from the table. "No problem, sir. Just finishing up," Marcus replied. Brad glanced at the whiteboard before Marcus could erase it all. What a day. Market's impossible right now. Nothing makes sense anymore. Marcus paused. He shouldn't say anything. He knew that. But the words came out anyway. Energy sectors oversold, especially the midstream companies with stable cash flows and 7% yields. Brad froze, slowly turned around. "What did you just say?" Marcus felt his heart race. He'd crossed a line. "Nothing, sir. Sorry. I read a lot." "You read about midstream energy companies?" Brad's tone was somewhere between amused and confused. "The Janitor reads about master limited partnerships?" "I invest, sir. It's just something I do." Brad actually laughed, not meanly, but genuinely surprised. "You invest, like, in the stock market?" "Yes, sir." "How long?" 3 years. Brad's smile grew wider. This was getting good. "And how's that going for you?" Marcus hesitated, then figured honesty couldn't hurt worse than this conversation already was. "I'm up 127% since I started." The smile disappeared. "You're up, what? 127. My portfolio's returned about 127% over 3 years. Brad stared at him. That's not possible. The S&P is up maybe 35% in that time. You're telling me you're beating the market by 90 percentage points? Yes, sir. Bull. Complete bull. Brad crossed his arms. What's your secret? Insider trading? Dumb luck? What? Marcus felt anger flash through him for the first time. Value investing, sir. I buy quality American companies when they're undervalued. I hold them. I don't try to time every move. I don't use leverage. I don't panic sell. I do the research, and I'm patient. The Janitor is lecturing me about investing strategy. Brad shook his head, but something had shifted in his expression. Prove it, sir. Prove it. Show me your portfolio, because if you're lying to me right now, I'll have you fired. Marcus pulled out his phone with shaking hands, opened his brokerage app, turned the screen toward Brad. The senior portfolio manager's face went through several emotions: skepticism, surprise, shock, and finally something that looked like respect. He scrolled through Marcus's holdings, his entry points, his returns. His strategy was visible in every position. Quality companies, bought at reasonable prices, held patiently. Holy, Brad whispered. You're not kidding. No, sir. You built this cleaning toilets at night? Marcus felt the disrespect, but kept his voice steady. I built this by studying while you guys were sleeping, by learning from your mistakes, which I see in every trash can, by not being arrogant enough to think I'm smarter than the market. Brad looked up from the phone. For a long moment, he just studied Marcus's face. Then he did something unexpected. He extended his hand. I'm sorry. That was disrespectful. I'm impressed. Genuinely impressed. They shook hands. Marcus thought that was the end of it. A weird moment, but over. He was wrong. 2 days later, Marcus was called into human resources. His stomach dropped. Had Brad reported him? Was there some rule against janitors talking about stocks? But when he walked in, Brad was there too, along with Sandra Chen, the firm's chief investment officer. Marcus, sit down, Sandra said. She was known as one of the toughest minds on Wall Street. Brad told me an interesting story. I had our compliance team verify your trading account. They confirmed everything. 127% returns over 3 years. Completely self-directed. No insider information. No violations. Marcus nodded slowly. Am I in trouble? Trouble? Sandra almost smiled. No, I won't understand how a janitor is outperforming 90% of my analysts for the next hour. Marcus walked them through his philosophy. It wasn't complicated. He looked for American companies with strong balance sheets, real earnings, competitive advantages, good management, and most importantly trading below intrinsic value, because Wall Street had gotten bored or scared. While your analysts are chasing the hot new tech stock or the latest meme investment, I'm buying the boring companies that actually make money. The ones doing share buybacks. The ones paying increasing dividends. The ones that'll be around in 20 years. Sandra leaned back. You know what your average annual return is? About 31. Do you know what Warren Buffett's average annual return is? Marcus knew. About 20% over his career. You're beating Warren Buffett. It's only been 3 years, ma'am. Small sample size. I got lucky with timing on a few positions. Luck is what unsuccessful people call it when they see success they don't understand, Sandra said. She looked at Brad, then back at Marcus. We have a proposition for you. That's how Marcus Webb went from cleaning floors at Sterling Capital Management to working as a junior analyst. They started him at 85. More than double his janitor salary. They gave him a desk on floor 42. The same floor he used to clean. The other analysts weren't happy. A janitor joining their ranks? The whispers started immediately. The snide comments. The exclusion from lunch groups. Diversity higher. Someone muttered loud enough for Marcus to hear. But Sandra had given Marcus something more valuable than a desk. She'd given him a small fund to manage. $500,000 of the firm's money. Show me it wasn't luck, she said. Marcus applied the same principles he'd always used. 6 months later, his small fund was up 18%, while the firm's flagship fund was up 6%. A year later, his fund had grown to $2 million under management and was up 34%. The whispers changed from mockery to curiosity. Analysts who'd ignored him started asking questions. How did you know to buy that regional bank? Why did you avoid the tech sell-off? What's your screen for identifying value? Marcus shared everything freely. He'd learned it all from discarded reports and public libraries. Why wouldn't he teach others? 2 years after moving from janitor to analyst, Marcus was promoted to portfolio manager. His fund now managed $50 million. His strategy had a name. The Webb Method. Financial publications wrote articles. The Janitor Who Beat Wall Street. From mop to millions. How an American janitor learned to invest better than the experts. Marcus stayed humble. He remembered pushing that cleaning cart. Remembered the analysts who wouldn't make eye contact with him. Remembered being invisible. Now, he mentored young analysts. He gave talks at community colleges in Queens and Detroit about financial literacy. He started a foundation teaching working-class Americans how to invest, because he knew something Wall Street didn't want to admit. You don't need an MBA to build wealth. You don't need insider access. You don't need to be born into privilege. You need discipline, patience, and the willingness to learn. 5 years after that conversation in the conference room, Marcus's personal portfolio had grown to $2.1 million. His fund managed $200 million and consistently outperformed the market. He still lived in Queens, though now in a house instead of an apartment. He still took the 7 train to work, though now he could afford to drive. And every Friday night, Marcus Webb stayed late at Sterling Capital Management, not to clean anymore, but to teach a free investing class for the building's service workers, janitors, security guards, food service staff. Because he knew something that Wall Street had forgotten. The American dream isn't reserved for people who start on the 42nd floor. Sometimes the best investors are the ones who started in the basement, looking up. The traders had laughed. The analysts had dismissed him. They said a janitor couldn't possibly understand what they'd spent 6 years and $300,000 learning in business school. Marcus Webb proved them all wrong. Not with luck, not with connections, but with discipline, patience, and the very American belief that where you start doesn't determine where you finish.